So money laundering, generally speaking, is a huge issue in the United States. It's one that costs our nation trillions of dollars each year, which is somewhat of a surprise. And effectively, the United States government has kind of reached their tipping point because effectively there are a lot of shell companies and anonymous vehicles, legal entities that are being used for nefarious activities such as money laundering, tax evasion and the like. So, in 2021, there was a new law passed called the Corporate Transparency Act, which came into effect earlier this year, which is kind of the premise of, elevating the reporting standards in the United States. That is hopefully good background for why this law exists and ultimately how we kind of got here. So as I mentioned, earlier this year, the law went into effect. The government actually started collecting BOI reports from businesses. The government agency that will be collecting the reports on behalf of nearly 30 to 40 million businesses in the United States is called FinCEN. FinCEN was a government agency that was formed in the early 90s to effectively really police the financial institutions, eventually extended their scope to the real estate space. But FinCEN is now, due to the Corporate Transparency Act, starting to regulate small businesses, which is obviously new, and many businesses actually aren't aware of this new law. So it's great that we have a great showing today and effectively looking to educate more on this new law. When the CTA was passed in 2021, the nation was rightfully consumed with the COVID pandemic, and the COVID relief packages that ultimately did run their course as well, such as PPP and ERC. And this law was really to help the government start to form a database for all these anonymous shell companies that do exist. The goal for FinCEN is to create this database, give other government agencies access to it, and also some select financial institutions so that they can, better police the underwriting and kind of the funds that are being transacted from businesses, legal entities, et cetera, within our nation. So this is a very large, kind of broad-reaching law, but FinCEN is just not very well known. So it's really no surprise that more folks haven't heard about this law, because FinCEN is just not a well-followed government agency, unlike, for example, say the IRS. But it is important to note that despite FinCEN being a very small government agency, this is a huge change. This is going to impact, FinCEN estimates, around 33 million businesses in the United States this year. And really just in the next few months, these reports are coming due. Most are due by the end of this year, or January 1st, 2025. Our platform, FileForms, and our team has been following this law since its infancy, and has more or less predicted what FinCEN was going to bring to market to file these forms, and really anticipated the fact that the government's really never impressed any users with their technology. So given the nature of this being a very broad-reaching law, we felt it necessary to build a user experience that will allow the masses, 33 million businesses, maybe even more, to file this form in a streamlined manner. Furthermore, we also anticipated that many CPAs, attorneys, bookkeepers, and the like will be fielding questions on this new law, helping their clients get compliant, and would more likely need a solution to truly service all of their client demands and needs. As Randy mentioned, I come from a financial services background. My co-founder and business partner Kenny, he's a CPA by trade, so we were able to have a very complementary perspective on building this technology compared to what the law was requiring and ultimately what we anticipated the government would provide from a reporting technology standpoint. But just to kind of review the various deadlines, which are super important because the fines for missing the deadlines are quite significant. Starting January 1st of this year, FinCEN actually began accepting these BOI reports. We'll go into detail on what actually is the information on the report. But businesses that were formed prior to January 1st, 2024, so all the legacy businesses, if you will, they have until the end of the year to file their BOI report with FinCEN. That being said, businesses that were formed during 2024 or January 1st, 2024, or past that date, they have only 90 days from their point of formation to file their report. So some businesses that were formed this year might actually have already passed their deadline and could be actually accruing fees and penalties for being out of compliance with this new law. Now, it's important to note that in 2025, in just a few months, which is crazy to say, 2024 has really flown by, but that 90-day window for the new formations is going to shrink to only 30 days. So as you can see with that trend and how the law is written, this is quickly becoming part of forming a business, is disclosing your beneficial ownership information with the federal government. Now, typically when you form a business, that's done at the state level. So this is kind of separation of state and federal government needing reporting individually. But it's important also to note that these deadlines are really just around the initial report being filed, where this is actually a perpetual reporting requirement. So unlike many state compliance forms, such as an annual report or a registered agent election, these are forms that aren't filed annually. These are forms that actually have to be maintained, monitored, and within 30 days of a change. And we'll go into detail on what is actually a change, but it's effectively any change of information on the BOI report that needs to be updated and refiled with the government within a 30-day time frame. So not a ton of time, and also somewhat of a hassle from a reporting standpoint to keep up with, because as I'm sure the CPAs and attorneys on the call can appreciate, checking in with clients every 30 days to monitor changes of information is probably the last thing that folks have time for. But this is a helpful overview of actually what's on a BOI report when it's being reported. We'll go into detail on what exactly a reporting company is, but a reporting company will need to disclose their legal name, their company name, their DBA if it's applicable, their physical address, their jurisdiction of formation, their EIN. So certainly want to get an EIN if you haven't had one already. And then for the beneficial owners, also kind of identifying information such as first name, last name, date of birth, the residential address, the ID number of their government issued form of identification, such as a driver's license or passport, and then also a copy, like a photo image of that document. So as you can tell, this is a decent amount of information. Obviously, businesses have more than one beneficial owners. So you could see 5, 10, 15. There's really no limit to the amount of beneficial owner and information that will need to be collected. But we'll go into detail on beneficial owners, company applicants, reporting company, etc. So what is a reporting company? Well, there's two types. There's a domestic reporting company, and then there's foreign reporting companies. In either case, a reporting company is essentially a business that is forming a registration document with the Secretary of State in the United States, or a tribal organization in the United States. So if you're actually forming a business, registering that business, licensing that business to do business in a state, that is kind of the first qualifier of whether or not a business will be a reporting company or not. So that includes all the Delaware limited LLCs, all the California for-profit corporations, Florida homeowners associations, anyone who's filing a registration document with the Secretary of State. Some sole proprietors won't have to report because they don't do that work. Some general partnerships don't file with the state, so they don't have to report because they don't do that work. But it is pretty broad reaching. Now, who are the beneficial owners? Well, once again, there's two types. There's those who directly or indirectly own 25% or more ownership interest in the business. So that's pretty black and white. But then the second type of beneficial owner is anyone exercising substantial control of the company. Now that is a little bit more open-ended. A lot of folks struggle with the definition of substantial control, but that includes C-suite executives, select board members that have veto rights, managers, directors, depending on their ability, folks with signature authority, as a few examples. So certainly a wide variety of different beneficial owners that exist. Some folks have pretty clear ownership structures, so it's straightforward. Others less so, but effectively they're looking to get information on who's controlling the business and kind of have that in a government database. Now, company applicant is another defined term that comes along with BOI reporting. Company applicant, it's important to note that it only applies to businesses that were formed on or after January 1st, 2024. So, company applicants of those legacy entities formed prior to January 1st, 2024 will not have to report their company applicant. But effectively, a company applicant is an individual or organization that effectively forms or registers the LLC or corporation or partnership initially at the Secretary of State. So it's that person doing the initial formation work on behalf of the business. So this could be an attorney, this could be a business owner themselves, this could be someone working with a registration or corporate services business to form their entity. But those businesses will need to disclose their information as well, similar to how BOs disclose their information on the BOI report. And company applicants will more than likely have what's called a FinCEN ID, which they can provide as an alternative to filing their photocopy. And beneficial owners can actually apply for a FinCEN ID as well. So if that's something that's interesting, we can certainly be helpful there. But we mentioned the 33 to 40 million businesses that need to file this report. Effectively, if you're filing, that registration document with the Secretary of State, means you're more than likely a reporting company. But that being said, there are 23 specific exemptions that, do limit some folks from having to file a BOI report. So I like to bucket the 23 exemptions into about 6 categories here, which you can see on the screen. And, these are all categories that effectively label these companies as businesses that are already disclosing their information in some capacity with a government agency that already exists. So not needing to redisclose with FinCEN because they already are disclosing their information. The government has a good understanding of who the beneficial owners are or the controlling decision makers are of those businesses. So the first category is highly regulated businesses. So this includes, banks, public utilities, insurance companies, which I know we have a few on the call, public accounting firms, for example, that are doing audit work, publicly traded businesses, for example, fall into this category as well. These are businesses that, have to already disclose information with federal regulators in order to, operate in their industry. So those folks are exempt. The second category is large investment companies. These are, SEC regulated entities. These are venture capital fund advisors, pooled investment vehicles. Once again, given the assets these folks manage and the nature of their business, they're already disclosing their BO information with the federal government. And then tax exempt entities as well. So given their ability to not pay taxes, they have to check a bunch of boxes in order to receive that designation. So thus, the government has clarity on who their controlling decision makers are. The large operating company exemption here, number 4, is worth a double click on. This has 3 parameters. So in order to be deemed a large operating business per FinCEN and receive this exemption, you have to meet all 3 of these characteristics, which include 20 full-time employees or more, 5 million or more in gross receipts on a previous tax return, and have a physical operating presence in the United States. So if all 3 of those parameters are met, then you are deemed a large operating business and ultimately do not need to file a BOI report. And then the last 2, subsidiaries of certain exempt entities are exempt, and then inactive entities, those that really have not transacted business in the last 12 months and have dissolved and, ultimately have had no change in beneficial ownership, don't have to report their BOI report. There's actually 6 parameters on the inactive entities piece, so I don't want to gloss over that too quickly, but If you are thinking that you might be exempt in that regard, please do reach out to us. We can provide some clarity there. So ultimately, who needs to refile? We touched on this a little bit before, but as information changes, that information that we just went over, you will have to report that information quickly to FinCEN within 30 days. So it's helpful to have a policy, procedures, and a workflow in place to facilitate this. And then our application actually monitors your data and provides you reminders and notifications, giving you the ability to make changes very, very easily. But generally speaking, the current lay of the land as BOI has been rolled out so far, there's been approximately 2 million forms filed to date with FinCEN. So only about 5% of the total amount that is expected by the end of the year. As mentioned, FinCEN expects about 32 million businesses total to have to file their report by the end of the year. So, effectively 95% of the United States still needs to file their form. Just from a market sentiment standpoint, we have certainly seen a pickup in form filing over the last few weeks since April 15th. And we expect that trend to continue. But it is a little crazy to think that, the volume of filings will, 10, 15, 20x by the end of the year, depending on when folks choose to get this out of the way. Now, I mentioned FinCEN does have a reporting solution that they offer. It is very bare bones. They do offer a little bit of education, but it comes in the form of lengthy documents that are somewhat intimidating for business owners to read. They anticipate filing on their platform will take anywhere between 1 to 2 hours. There's no ability to save the information. There's a huge ability for margin of error. There's not a ton of guidance throughout the solution, and there's just pure lack of support. FinCEN does not have chatbots. They don't have a customer service team. They're very lightly funded government agencies. So I think they're doing the best they can to kind of get the message out and build a solution that is able to file a BOI report. But as we think about time efficiency, data security, and education and support, FinCEN's just only able to get so far on that regard. So, that's why Alignable and FileForms have really come together and partnered. Obviously, Alignable has a tremendous network of over 10 million businesses, and more or less all of those businesses will need to file a BOI report by the end of the year. So, FileForms is able to file BOI reports in 10 minutes or less using a BOI filing solution that business owners are able to easily navigate, get help when they need it. Our team's on standby. And really store their information and monitor it over time so they can perpetually stay compliant and avoid the crazy fines from the government, which are $591 per day for being miscompliant, up to $10,000 per entity, and then effectively jail time on the line as well if compliance isn't reached.